So you're interested in trading and you want to know the specific strategy that I trade. This strategy has made me well over $100,000 this year. This is the exact strategy that I use every single day. And I'm going to break it down as simply as possible. And then you basically have to build market knowledge, discretion of your own using the strategy through back testing, and then you can become profitable. Okay. Don't think you can just watch this video, see how I trade, and you're going to be profitable, right? But I'm going to give you everything that I use to be profitable. You just then have to put in the work to get there, right? So I'm just going to draw on here. Okay, so I'm going to break this down into three parts. So my trading strategy is there's three major parts, right? I would consider the most part is like market direction. So that's DOL, draw on liquidity, is part one. Okay. This is very important. Okay. Part two, I would say, is like, I would just say confluences, or honestly liquidity slash imbalance, right? Imbalances. Okay. Let me type this out so it looks a little better. I'll keep DOL though. Let's do tag, slap it right here. Liquidity slash imbalance. Oh my gosh, I'm cooked, bro. Imbalance. Imbalance? Imbalance. Imbalance. Imbalance or imbalance? I'm tweaking right now. See, look, if I can do it, you can do it. Okay, I'm cooked. Let me draw another line. And then part three is going to be confirmation confluences, right? So this is basically my strategy. It is extremely simple. I find DOLs, draws on liquidity. I then wait for liquidity or imbalance to get tapped into, and then I have my confirmation confluences. That's literally as simple as I can explain my strategy, right? But let's break down DOL first, right? So forms of draws on liquidity, right? You have highs and lows, and I would consider higher time frame, right? I would say 1 hour, and 4 hour. I would say session highs and lows, data highs slash lows, right? It's going to be like this every time, whether you're targeting to the upside, downside. So I'm just going to say data, or like data highs, like, you know what I'm saying? Lows too. Then major imbalances. So like fair value gaps, 1 hour, 1 hour and 4 hour fair value gaps, imbalances, new week opening gap, new day opening gap, so on and so forth. Equal lows or highs, low low resistance liquidity, LRL. I'm cooked right now, can't spell. And I mean 930 low or high, like market open, that's the first candle, market AM, and previous day high or low. These are kind of like the major ones. These are the ones that you're going to see often. These are the ones you're going to be able to build your bias off of. Obviously, it's going to be structure dependent and daily dependent. I break down, these every single day, but like these are kind of like the simple stuff. So like when I'm looking at the market for the morning, right? When I'm building my strategy, when I'm looking at what I'm wanting to trade, say we put some equal highs up here and then we push down, right? Well, this is a major draw on liquidity. I'm going to mark that out. Okay. I'm like, okay, that's a good target for market open, right? I want to find a reason to take a trade to there, right? I like that as a profit target. And then maybe to the downside, you got like London low down here. So I'm like, okay, but we could also come book London lows, right? Like this is also a possibility. Like I have this in mind when I'm thinking, like looking at trades. So basically, and then you could also say like what makes it even better, like you could have bang London high up here and then also a major 4 hour gap resting above this, right? And it's like, okay, now we know that there's liquidity in buyers. Like you have orders that can be filled up here, right? Price is going to want to go up in there. I mean, this is very simple, right? But what I use is the 4 hour time frame, right? 1 hour time frame, 15 minute, 5 minute, and 1 minute. Okay, those are the time frames I use. I build most of my DOLs on the 1 hour and 4 hour. I go look at those. First things I look for the session highs and lows. So Asia session, London session. I look for the high and low of each of those sessions, right? Have we taken those out? Have we not taken those out, right? And then I look to see how the 1 hour and 4 hour looks. Are we bullish, bearish, right? Where do we want to go from there? And then also, I take all this other stuff into play. There's a lot to this. Is the 90% of like the studying you should put into is just looking at what price wants to take out and why. Okay, I think this is a major part and aspect to your trading, and you really need to get this dialed in. Okay, I'm not going to go too much into here now. This is you. This is you building your confidence in targeting these things and just realizing what price targets. I want you to just look at all these. I have them all listed here. I want you to just go through sessions after sessions and just look at these and see which ones get hit. Okay, these are the major DOLs. When I'm building my bias, I'm targeting most of my trades. 99.99999% of my trades are targeting these. Or I'm just targeting some random 5 minute low that's resting in a massive gap. Like it's all of my trades for the most part, I'm targeting one of these, right? I'm not taking a trade unless I have one of these. So this aside, let's delete this. Now, liquidity and imbalance. What I mean by this is what I need to then target my trade, right? So if I want those equal highs I was telling you about, price, I want markets here. We have a gap down here. Price comes up, taps this gap, and I get strong reactions up. I'm expecting to go take out equal highs. So I got the imbalance tap to then push price to the upside. So where I use liquidity and imbalance is I need price to go into something. Like it needs to be reacting out of something towards my DOL, right? So in this case, this would be a fair value gap. But let's say that London low scenario I was talking about. Market opens. Boom. We come down, take out London low. Boom, displace, right? And we got, the target up here. That's great. I'm going to take, longs, whatever my stops are, boom, target up here, right? This is how I trade. But let's say the same scenario, I got two DOLs. You're like, oh my gosh, Caden, how can you have a bullish and a bearish bias at the same time, right? I know both of these are great confluences. You can higher probability wait for one of these to get taken out and then take it to the other one, right? That's the higher probability play. But, watch out, there's a little fly on my screen. Oh, but say there's a 1 hour gap in here, right? This isn't my DOL, but it's a way for price to then react to take out one of them. Boom, taps into here, rejections off it. Boom, we take out this, push down, and then we start going back up. Boom, right? So you could take this short here to here, or you could wait until this area gets tapped down here, and then you get displacements back up to the other DOL, right? Multiple plays, right? So this is what I mean by liquidity and imbalance. I want price to either be in imbalance, like it goes from price goes from imbalances to liquidity, right? It goes from an imbalance to take out, let's say there's a low over here. Let me just draw a low, right? You got a low over here. Price is going to tap into the imbalance, go to liquidity. Or same scenario, reverse it. You got low here. price opens, takes out low, goes to the imbalance, right? Like these are like boom, we sweep liquidity, we go towards the imbalance. Or we tap into the imbalance and then go towards the liquidity. Okay, you kind of get what I'm saying here? So like I want price to be in something, liquidity or imbalance, to then go towards my draw on liquidity, right? And this can be on the 1 hour, the 4 hour, or the 15-minute, depending, right? The lower time frame you get, the more manipulated you can be, right? So what I like to do is go to the 1 hour, find my DOLs, find my draws on liquidity, figure out what I want to target for the day, and then I go down to a lower time frame, 5-minute, 15-minute, and I want to see order structure being built to then go towards a DOL. Okay. Okay, so now, boom, we got draws on liquidity. We got what we're going to target for the day. Okay. We got this high up here, right? It's beautiful. It's London high. That's what we want to target today. Okay. We also have, let's say, equal lows down here, and then we pushed up, right, into that leg, right? And then we made that high, and price is opening right around here. Okay. So we have 2 DOLs for today. We got equal lows to the downside, and we have London highs to the top upside, right? Boom. Now we need liquidity or an imbalance to be tapped into. Let's say, boom, imbalance here, and we want it to go towards equal lows. Right? And so we would want to take a trade out of this imbalance. So how do I find a trade, right? So I wait till price taps in there. And then let's just imagine this is zoomed in, right, over here. Let's zoom in. Let's say we're in this gap, right? We're on the 1 minute now. I go down to the 1 minute. So we tap into the gap. We're bullish, we're bullish, we're bullish. Boom, here's my first confluence, break a structure. When the 1 minute breaks trend to the downside, I'm basically front running that the 5 minute is then going to go bearish, and then we're going to continue down until we take out our draw on liquidity down here, right? So break a structure is the first one. And all a break of structure is, right? Let me draw this out for you. So you have a candle low, and then you have a candle upwards, right? Like you have a down candle and then an up candle, and this low here, this wick, when price closes, when a candle closes underneath the body, this is a break of structure. The candle needs to close under the most recent low. Okay. Like we came down, made a low, started moving up, and then this low needs to be closed under. Right? All break of structure is prices going up, making higher highs and higher lows, and then sooner or later we make a lower low. That is a break of structure, but it has to be the body of the candle that closes underneath it to be a valid break of structure, right? So that's entry number 1 as my possibility. Entry number 2 on the lower time frame is we're moving up, same thing, uptrend, uptrend. It's IFVG, okay, an inverse fair value gap. If price creates a fair value gap on this leg and then gets inverse, that is enough for me to target lower, right? Or vice versa, price is moving down, IFVG, or price is moving down, break a structure. Okay, these are my 2 entry models right here, IFVGs and break of structures. That's it. That's all I use to enter trades. I have to have one or the other to enter a trade and be confident in it. So overall, I find my DOLs. I wait till price taps into some form of liquidity or an imbalance to then move price towards my DOL. And then I go down to a lower time frame and enter off the 1 minute on a break of structure or IFVG. That is as simple as my strategy is. It is not complicated at all. And let me show you it playing out a couple times in this chart. So let's just take today, for example. I didn't take a trade today, but it played out. 9:30, 10 or 9:50. So I trade the macro as well. I don't like market open. I get manipulated a lot, and that's just not what I like, right? So we have the highs made here, right? You got a bunch of liquidity going down. We have the just 1 hour high here. Just major, like we chopped down on the 1 minute. So a lot of liquidity resting above here. We tap into it. And let's say this candle low was your target, right? It didn't get hit yet, but like, let's just say it is, right? So market opens, we come up, we sweep out that liquidity here. This is where you got to be a little careful because theoretically we swept the liquidity and we broke structure right here. And you could have got rinsed, right? Like this is where you got to like be a little bit patient here. But in a sense, we swept liquidity on a simple term. You're going to get better at recognizing which ones play out. I stopped trading because we were so choppy. So like I just got off the markets. But as you can see here, this IFVG here gets inverse. You could cop shorts, target, infinity. Let's just say you were taking to here. 500-point nuclear, right? Could have caught an absolute insane banger of a trade. Let's go to same degree here. Market opens. This is beautiful. This is beautiful. You wanted this high. Say you are willing to take a trade early. Market opens, comes down, sweeps. Look at this. Taps into 15-minute imbalance here. Boom. Go to the 1 minute. Taps into it. Break structure to the upside here. Longs. Kind of a monster stop, but a 1.2R. Just like that. As simple as that. That's how price moves, guys. It moves from imbalances and liquidity. That's literally how it moves. Look, we tapped in to this major liquidity and we reacted downwards, and we're going to take out this 4-hour low most likely. Just look at price. It literally comes down, sweeps this low, moves higher. That's a little choppy. Comes down, taps this imbalance, moves higher. Taps this imbalance, moves higher. Sweeps out this high, moves lower, takes out this low, moves higher. It's just how price works. You just got to get used to reading it on the lower time frame. Let's go to Wednesday I won. Wednesday I won. So look, shorts here. Little shorts. No, I think I took. What did I take on Wednesday? Was my cooked? Let me see. Let me see here. Wednesday. Oh, wait, today's Wednesday. What did I take on Tuesday? Tuesday. Let's see. Tuesday, 9:30. Let's break this down real quick. 9:50. Okay, this is what I took. I took these longs here. So we come down, sweep this out. We swept liquidity, and to the upside we had some major. We had a daily gap, I think, on Tuesday. Yeah, we had this on Tuesday. Go back to the 5 minute. Oh. So we come down, sweep a 1 hour low. Sweep a 1 hour low. Right? Sweep the 1 hour low here. We move up. I wait till retrace. get the retrace because we didn't break any structure to the upside. And also early in market open. I like trading a little bit later. We get a pullback, and then we get this IFVG here. Bangarang. Rufio. This is the trade I took. Right there. And then look. We dump to oblivion. Right? We tap in to this major gap. Right? Fill a bunch of liquidity. And we break structure to the downside right here. Boom. Could have caught shorts. Stops at these highs. Target whatever liquidity you wanted to the right. You could have literally taken out this whole leg. Could have targeted this. Is this playing out every time? No. This was a special crazy occasion, but look at that. Could have had a 74-point stop loss, 1,000-point TP. Right, so this plays out, guys, every single day it plays out. It's just whether or not I get what I want to see for my trade entry. It plays out every single day. I find my DOL. I wait for liquidity or imbalance to get tapped into to then take me towards it, and I go on a lower time frame and find an entry. This strategy has netted me over around a 70% win rate, around a 2R average. It goes nasty. I've gone on 10, 20, like 10 trade winning streaks, guys. I've made a ton of money with this strategy, and this is the specific strategy that I trade every single day. If you need more help, I have trade recaps of every single session that I take a trade, every single morning that I take a trade. I only take one trade a day. I only risk a set amount. I'm one and done. I'm not taking multiple trades. I just notice that I end up, over risking, over leveraging, revenge trading. I only trade AM, New York AM session. It's the only one I've back tested. I do really well on it, so I'm not really gonna go to any other sessions. I wait until at least 9:40 to even enter a trade, and I like to be in a trade by like anywhere from 9:40 to like 10:10, right around that macro time when that new hourly and 4-hour candle is formed at 10 a.m. I like catching that expansion or dump, either or, towards my DOL. And I just noticed that DOLs get hit around that time. It is a high volatile time, and price plays out during that time. So that's why I didn't take any trades today, because I kind of got off once we sat here and chopped. I just got out. I was like, I'm not trading on this. We already kind of took the DOL to the upside, kind of getting off for the day. But recently we've been booking like 2 DOLs every single session morning. So it's been kind of crazy. Like I'm catching 100-point trades, which are massive, and then we end up reversing 500 points. So, but yeah, guys, this is the strategy that I use. I've made over $100,000 doing this, and yeah, I'm going to continue to make more and continue to literally expand and explode, bro. I'm just going to keep going crazy. I'm going to run up insane numbers. I should be able to make over 50 this month. So it's about to be a $150,000 strategy. So, but yeah, guys, this is a strategy I use. This is what I do every single day. If you need more information, go look at the other videos. Y'all have a blessed one.